y'all, welcome back to my channel. I'm a former loan officer and I share products where I help you get your money on the right track, help you achieve your financial goals, because of course no one has the same income, expenses, budget, or anything. So that means you have to make a money goal for yourself and have a money strategy for yourself. So I do share products to help you with that. So today I'm just going to be answering a question that I received for one of my NACA videos. Like I said, I am a former loan officer, but I never worked for NACA. I never been a mortgage counselor there. I never did any mortgage loan applications there or anything. My relationship with NACA is just that I bought my first house through NACA and that's it. But with me being a former loan officer, I am able to answer a lot of questions when it comes to getting qualified for different loan products. Of course, over the years, you've seen me qualify for quite a few different mortgage products, and that's because of my profession and that was my career. So I do understand how getting qualified does work. So one question that I had that was left under one of my videos was, what is a low income to me? Would $45,000 be enough to purchase a house for more than $150,000? So with that, I'm just going to go ahead and answer that question. I would say a low income is anything below like the median income for that area. Would $45,000 be enough to purchase a house for $150,000? It could be enough, but it's completely dependent upon your personal money situation. I did make a video talking about how to afford a mortgage loan or what factors they're considering, which the main thing is your debt to income ratio to see if you can actually afford that loan product. So I say it's personal because it's depending upon how much debt you actually have as a person. How much do you have? And so what that would mean is how much is your monthly debt payments? Because some people may not have any extra debt, but other people may have more debt. So it's depending upon how much you can afford as far as your debt to income ratio. So yes, $45,000 may be enough for that person who doesn't have any debt. But $45,000 may not be enough to afford that same house for a person who has a little debt. So it's depending upon you. Another thing to consider is depending upon the company, the lender. So some people, they consider different debt to income ratios. So for example, I know one company that only considers like 43% debt to income ratio. I know another company who would consider 50% debt to income ratio. And they would be able to get people approved depending upon like what their company is willing to accept, right? So if a company is willing to accept more debt compared to your income, it's possible that you're more likely to get approved. So that's something else to consider. Another thing to consider is, what are the expenses for that house, the monthly expenses for that house? Like, for example, when you look at your debt to income ratio, especially for a house, then some things that you have to consider is like the property taxes for that house. Does that house have an HOA? So for townhomes, those are some of the homes that would probably be around that $150,000, $200,000 mark. But with the townhomes, they do include HOAs that are sometimes like $150 per month, which that would also be considered as a part of the monthly payment for your debt to income ratio. And so if that's the case, then that may cause you not to be able to purchase that house for $150,000 compared to if you were to get a single family home where the HOA is only $20. So that's something else to consider. And also even with interest rates these days. So when I purchased my house, the interest rate that I got through NACA was 3.75%. And that was for a 30-year fixed rate mortgage. But now interest rates have increased recently. So of course that would cause your monthly housing payment to be different because now you have to pay more in interest. So that's something else that you would have to consider is the interest. So I mean, what you are pretty much looking at is how much your debt is with your monthly payments, and then also how much the possible payment for your house is going to be, and all of those different factors to consider with that housing payment. Like I just listed, property taxes, homeowners insurance, interest, HOAs. So those are other things that you want to consider. So in conclusion, the answer to that question is completely depending on your financial situation as far as your debt. It's completely depending on what that company is willing to accept as far as what debt to income ratios they will allow or what they feel like is too high. And then also it's depending on that house and what's included as far as the monthly payment for that house. So like I said, I do share products that help you get along on your financial journey. So one thing that I do have is a course where I talk about the different things that I was looking for as a loan officer, like when looking at your credit report or seeing how to actually get approved for a loan. So that's just a course that I offer. But with NACA, they do usually have mortgage counselors. And so you may not need that course, but another product that I offer that may be helpful for you, I do have a debt to income ratio calculator. It allows you to put in your specific numbers and also find what the lender is willing to accept for a debt to income ratio. And then it'll come out with an amount that you should be able to afford for a monthly payment. Then also I do have a debt consolidation or debt payoff plan that is targeted to lower your debt in the most efficient way or in a way that costs you the least amount of money up front. So those are some products that I do offer that may be helpful because of course if you can actually lower your debt payments, then that may help with the amount that you can actually afford, because then of course your debt to income ratios become lower, and so then you'll be able to maybe afford more for a house. All right, so that is it. I hope this video is helpful. I'm also doing this series where I'm going to go ahead and answer all of the questions that you all leave because I know if one person has that question, maybe another person would have that question, and I feel like it will be helpful. But yeah, so stay tuned for that. But thank you all for watching, and I'll see y'all next time.